As I mentioned off the top of the show, if you're an investor that has made investments into the TSX or own stock that trade on the TSX, maybe own the ETF of the TSX or the Dow Jones, a smaller index, only 30 stocks, you probably didn't see much in the way of gains. Compare that to the S&P 500 or the NASDAQ, which really took off and moved significantly higher at the start of the year. The Dow and the TSX really didn't do an awful lot. And this goes to show us because this teaches us a good lesson because all the gains, and I mean all the gains on the Dow or for the Dow and the TSX have come just in the last few months. The Dow Jones is actually higher by double digits, higher than 10%, more than 10% gains have come on the Dow just in the last few months. And the TSX has made all its gains since November 1st as well. We have a couple of charts that will clearly show this. First one we have, the Dow Jones Industrial Average. You can see here, this is a 6-month chart, and you can see pretty much how the index has been just moving along, kind of trading sideways, hit a low point at the end of October, and then all of a sudden, bam, stock market or this index really took off at the end of the year. In November, significant highs. In December, significant gains. And obviously, we still have a few more trading days for this year, but things are looking pretty darn good right now if you're someone who owns many or some of the stocks that trade on the Dow. We also have a TSX chart as well that shows us the similar thing. We've seen pretty much sideways movement, ups and downs, but really not going anywhere until the end of October. And then once again, you see the index move significantly higher in November, December. So what do we glean from this? What do we take from this type of movement? Well, number one, you can't time markets, right? You never know when the gains are going to come. You never know. Had you been frustrated or tired of owning some of the stocks that trade on these indices and you sold them, well, you would have missed out on a lot of gains in the last couple of months. As I said, the Dow Jones up well over 10% now. If looking at some of the names, if you're looking at buying certain names that traded on the indices, yes, you may have had some gains because obviously owning the whole index or perhaps maybe picking some of the winners that were there throughout the year, you could have fared a lot better. But overall, you want to continue to build a diversified portfolio. And you want to own these good quality names, whether they trade on the TSX, Toronto Stock Exchange, on the Dow, the NASDAQ, the S&P, it doesn't matter. And what you don't want to do or what you want to avoid doing is trying to time markets. Get in, get out, because as you can see, if you tried to do this over the past year, you would have been very tough. You would have been very difficult to do because most of the gains, or if not all the gains, for these two indices have come just in the last, let's call it 6 to 8 weeks. So this, I guess, the main lesson to take away from this is you really can't time markets. You want to own good quality. You need to be patient. As long as your investment ideas are still of good quality, and as long as the thesis or the story remains intact, you need to be patient because good quality investments do rise. We know stock, our indexes, our indices do rise over time. Good quality stocks do rise over time. And so if you remain patient and in these good quality names, as showing us here with the TSX and Dow, you will continue to rise and your portfolio will continue to appreciate over time.